year will go down as the best ever in the history of India's mutual fund industry. Domestic mutual funds witnessed total inflows of 1.69 lakh crore in 2017, which is the highest so far.
Okay, that's your top headline on the Money Show. Next up, it's high-profile panel headed by the Economic Affairs Secretary Subhash Chandra, who could decide on the government's stand as well as bitcoins. This comes close on the heels of an RBI warning against the use of the cryptocurrency. Meanwhile, the Bitcoin futures tripped circuit breakers, making it big bang debut on the CBOE.
Good evening and welcome to the Money Show, the only daily show of its kind which brings you the market's top financial experts to answer your financial queries. I'm Avni Raja and with me Avan. Hi Avan.
Hi Avni. Well, yes, we've got lots lined up on the show. In fact, today we will be touching upon two topics. We'll be talking, of course, about all of your viewer queries. We'll be touching upon the fact that 2017 has been the best year in the history of India's mutual fund industry in terms of the kind of flows that we've witnessed, as well as talk about the recent rush in IPOs in 2017 and what you should make of this. Joining in today, we have Pankaj Mathpal, MD Optima Money Managers, and in just a bit, Prithvi Haldea, Chairman and MD at Prime Database as well, will be joining in. Pankaj, lovely to have you with us after evening. Domestic mutual funds, and we've seen a massive growth, a total inflows of about 1.69 lakh crores in 2017, which makes it the best ever year in the history for the mutual fund industry. What have you made of the overall, inflow that we've seen into the mutual fund space? And do you think that this kind of a pace, despite the volatility we've witnessed in the market, is likely to continue?
See, most important thing is awareness. People are aware about the mutual fund now. And earlier what was happening that whenever the market went down, people were discontinuing their SIPs. But now if you see that people stick to their investment. So one is that awareness. So people are investing through SIP route. More and more people are participating in this. Second is that because market have performed well in last couple of years, and that is another reason that people have got more faith in mutual funds. And then other than equity also, because if you see other kind of mutual fund, non-equity mutual fund, debt, liquid fund. So now investors are understanding the importance of that, and instead of investing in traditional instruments like small saving schemes or fixed deposit, they are participating in mutual funds. So overall means awareness, market performance, this has helped. And if you see that SIP, there are around 1 crore 80 lakh SIP accounts, and more and more new accounts are opening. So that is adding to the value of that total mutual funds, which has helped growing the market.
Right. Pankaj, have you seen a kind of improvement as far as the discipline of investors is concerned in mutual funds, which is the reason that despite any kind of volatility and all of that, we still see the flows sustaining and increasing? Are you seeing that level of maturity and discipline coming in as far as Indian investors are concerned?
Definitely now investors are mature, they're investing. As I said earlier also, what was happening whenever market was down, people used to discontinue their SIP. See, we always say when market is coming down, you should invest more. But it was happening other way around. Whenever markets were not performing, people were not investing even. Even if they had long-term goals, they were fearful. But now if you see, people are maintaining discipline. Their SIPs, which were started 5 years ago, even they continue. So they understand importance of goal setting. And another reason that why people were stopping SIPs, because there was no goal behind that. Like for short term, they were investing in equity, and then whenever means they need money and market is not favorable, they were losing their money. Now they understand the importance of different kinds of mutual fund. So for short term, like investing in right from liquid fund to debt fund, and for long term equity fund, they're investing. So now because of the awareness in mutual fund as a financial planning overall, investors are maintaining discipline. They understand the importance, and they understand the importance that why they have to invest. Otherwise, that inflation, if they invest in the traditional plans, even it is difficult to beat inflation. So considering these all things, awareness, market performance, there is more discipline and more SIPs. If you see overall also in mutual fund industry, as I said, 1 crore 90 lakh SIP accounts. And if you see the average SIP also, it is around 3,000, more than 3,000 per account. So overall, if you see, there is a discipline and more participation in the mutual fund market.
Okay, that's the view coming in on the kind of flows that we've seen into the mutual fund industry, and so far so good. But let's also talk about the IPO market. We've really seen quite a bit of a frenzy come in here. A number of big issuances have hit the markets in the year 2017, and it seems to be a perception among investors that perhaps it's safer to put your money into IPOs because you get shares directly from the company. But let's understand the kind of movement that we've seen and how one should exactly approach IPOs. An expert joins in, Prithvi Haldea. He's the chairman and managing director at Prime Database. Prithvi, thank you so much for taking time out and joining in. Now, it seems like issuers are really using the lack of investor awareness to their advantage when it comes to the IPO market. There's a lot of froth over here, and there's some IPOs that of late have demanded very high valuations. No doubt a lot of them have performed very well. We're talking Shankara, Avenue Supermarts, AU Finance as well. What is it, or what are some of the key do's and don'ts that you would advise investors to look at before putting their money into the primary markets?
So basically, having seen this market for so long, if an investor has no understanding of the market, of the company, of the industry, of the economy, he should rather put his money in mutual fund, because then there is an expert fund manager who is looking after his money. If you are just investing in the hope that markets are going up and therefore you will always make money, it's a myth. And most of the times, investors who know when to buy but never really know when to sell ultimately end up with losses. So for absolutely an illiterate sort of investor, I have been recommending that they should come straight into the mutual fund route. However, if you have some interest in the market, you can understand the prospectus, at least the abridged prospectus, understand about the company, know what QIBs mean, you have some decent understanding, then I think it is good to invest in IPO market. There have been some instances of overpricing, but by and large, returns in the last 2 years on IPOs have been absolutely fantastic. We should also believe and know that all IPOs are not homogeneous. Each IPO is of a different company, different track record, different sector. And like in the secondary market, some will do well and continue to do well post listing. Some will probably not perform well, and people may lose money. So at the time of investment, obviously you should look at key things like promoters. You should look at all the negatives in terms of the risk factors which are attached to the company, and look at whether there has been a pre-validation done by institutional investors like PE or VC funds, because then you can expect at least a higher degree of corporate governance. So these factors, and when you make up your mind to invest in an IPO, then I think it would be good to also look, don't apply on the first day, look at the QIB book, how it is building, and in case QIBs are showing sufficient interest in a particular IPO, then I think it is fair enough for a retail investor to join the queue and hope for some allotment, because we also know that there is a problem for allotment. When issues get hugely oversubscribed, you block a lot of money and then you may get very few shares. But since now SBA is in place, at least the whole process of writing out a check and then waiting for days for refund orders to come in, that era is gone. The period has already been reduced in terms of IPO closure to listing. So it makes sense for small investors to keep looking at IPO opportunities.
Right.
But then once you've invested, then don't believe that forever this company is going to do well and you're going to make money. You have to then continuously monitor the company, its performance, read the balance sheets, and decide whether you want to remain investor or you want to get out of the stock.
Absolutely, Prithvi. Important points that you're mentioning there. But over the past 2 years, like you were also mentioning, how we've seen the IPO market boom really. How have you seen retail interest? Of course, there is a lot of retail interest, but do you think investors are being slightly not as cautious as they should be as far as IPOs are concerned?
I think that frenzy is still not set in where every IPO is receiving lakhs and multiples of 10 lakhs of applications. Retail is still very cautious. We do not see huge number of applications. So I think we are still very far away from frenzy days of say 2005, 2006, where every IPO would receive lakhs of applications and people would just invest irrespective of the company, track record, sector, etc. I think one very important change that has taken place between that boom and now is that the number of issuances has gone down substantially. For example, in the current financial, we have just had 31 IPOs, but the deal size has gone up substantially. 63,000 crores has been raised already through the IPO market, which is the highest ever in the Indian history. There have been good companies, large issuances. Some will, as I said, some may do not so well in the short term, but they are all companies with a very strong market presence, and investors should, in case they want to remain invested, then they should continuously monitor the company. But majority of the IPOs have given very good returns, and going forward, I was just seeing the pipeline today, and I think 36,000 crores worth of IPOs are currently pending at SEBI or have got SEBI approval, which are yet to hit the market, and this pipeline will continue to grow. So there will be very good opportunities which will come through, and hopefully some PSU divestments may happen. And we have traditionally seen that PSU IPOs have been underpriced, and investors have by and large made decent money in PSU IPOs. So I would advise the retail investors to keep looking out for PSUs also.
Okay, so final question before we let you go. What exactly should an investor look at when they are looking to put money into the primary markets? Reading, of course, brokerage report and recommendations, looking at the overall grey market premiums. Is there any other advice?
No, so I would not look at the grey market premiums, etc., because then you are actually limiting yourself to a very short-term investment. You are looking at, whether you can make listing gains. If you want to be a slightly serious investor, then look at 3-4 things very importantly: the promoter's credentials, the risk factors, prior investment from a PE or a VC firm and their length of investment, and also the fact whether they are exiting substantially or partially from the IPO, because in case they are exiting fully or substantially, then I would see that as a negative sign, because they don't, them being insiders of sort, they don't see a very happy outlook going forward. So I would look at these factors and then take a call. I mean, it is not possible for a common investor to understand the industry or other factors in detail, or the technology, for example. But if you basically are cautious about these 3-4 factors, then you would not make a wrong decision. But as I said, once you have got an allotment,
Sure.
then please keep looking at that company, keep reading more about that company,
Right.
and decide when to exit. It's no good holding it forever and then saying that you were cheated in a particular IPO.
Right. Okay, let you go on that note. Thanks very much for that advice on how one should really look at the overall IPO frenzy, given that this has really been a hot topic and a hot space of late. Let's shift gears. All of you have sent in your questions and queries. We have a question first up coming in from Sri Krishna. He says, I have investments in the following mutual funds and I want your recommendations. I would also like to invest in more funds for around 3 to 5 years with a monthly SIP of around 5,000 rupees per month in total. What would you suggest? The funds I hold are Axis Long-Term Equity Growth Fund and ICICI Pru Balanced Advantage Fund. Pankaj, let's get in your take on these two funds and what exactly it is that you would advise, because he has some additional money to put in.
Correct. See, Axis Long-Term Equity Fund is a ELSS fund, so it's a tax saving fund basically, and one of the best funds in this category. It was launched in December 2009, and if you see, since inception, it has been a consistent performer. So definitely in my recommendation, I always use this fund. So he can continue with this fund, and if you want to increase even for tax saving purpose, he can add to this fund only. And ICICI Prudential Balance Advantage Fund, that is asset allocation fund basically, which invest in debt as well as in equity. And usually we see in the balance fund, the equity allocation is 65% and 35% is in debt. But this fund is based on the quant model. So here your equity allocation that can go up even beyond 65%, sometime up to 80% also, based on the market performance. And second thing, within equity also, it is based on the price to book ratio. They keep on rebalancing the portfolio. So for the investor who wants to invest for something like 2 to 4 years, I'll recommend this fund. But for long term, if you want to invest for something more than 5 years, then you can include Aditya Birla Sun Life Pure Value Fund. That is a good quality mid cap fund. You can invest in that through SIP route.
Right. All right. That's as far as that question is concerned. Next, let's just focus in fact to Bitcoin, because that's clearly been the flavor of the season, and we've been receiving a lot of questions here on the Money Show for Bitcoins. But before we get to the question on Bitcoin today, a high-profile panel headed by Economic Affairs Secretary Subhash Chandra could decide on government stand on Bitcoins. This comes close in the heels of an RBI warning against the use of the cryptocurrency. Meanwhile, the Bitcoin futures strip circuit breakers making a big bang debut on the CBOE. That's the latest that's coming in as far as the Bitcoin is concerned. Here's this report by Mubina.
And in fact, interestingly, my colleague Mubina is here to talk about, we're talking about this Bitcoin frenzy and how prices are really going through the roof, but an interesting analogy on what Bitcoin at the current level could buy you. So let's hear out what Mubina has to say on that. Mubina.
Well, yes, we all do know that today is a momentous day when the Bitcoin is finally going to be listed on an exchange that is formally regulated. That's the CBOE. Come 18th, it's also going to be listed on the CME, two big exchanges in the United States. But what can one Bitcoin do today in India? Well, starting off, let's talk about a Louis Vuitton bag, which is at about 80,000 rupees in a mall in India. 0.07 Bitcoins, that's all you need to purchase a Louis Vuitton bag. Increase it a little further and you will be able to get, you'll be able to get an iPhone X at about 0.1 Bitcoin, considering the price is at about 1 lakh rupees. At half a Bitcoin, you'll get in a whole Maruti Desire, and if you want to up the stake a little more, at 1 Bitcoin, you'll be getting a Honda City, which is of course a petrol variant, for 10 lakh rupees. 10 Bitcoins and you will get a 1 BHK in a Mumbai suburb. So I'm talking about a small little studio apartment, let's say in Andheri area, or even perhaps a little closer towards the south of Bombay. Another 40 Bitcoins and you will be able to treat yourself to a Rolls-Royce Phantom, which is of course one of the lower end Rolls-Royce cars, but nevertheless it's worth 4 crore rupees. So no complaints over there, especially if you've bought those Bitcoins like almost about 5-6 years ago. 200 Bitcoins will be able to get you 1 light private jet. While not convenient for far away distances, but at least for close by distances, 40 Bitcoins, or rather 200 Bitcoins will do the trick. And finally, the ultimate dream, a luxury mansion at Beverly Hills with your own private pool and whatnot. Well, you need just about 330 Bitcoins for that one, because as per a conversion rate of about 65, you're talking about a Beverly Hills mansion which costs about $5 to $6 million. Well, 330 Bitcoins will do the trick.
Mubina, thanks very much for giving us those details, and this assuming that the Bitcoin is at about 1,84,000 in Indian rupees. Remember, we're not advocating that you should put your money into Bitcoins, but we're just giving you some interesting details on this. Remember, there is a high-profile meeting, as we spoke about as well, talking about the Bitcoin currency futures as well. So let's talk a little bit about Bitcoins then. We've got a question and query, and we've got a ton of them that we get bombarded with. And this time, Ram has sent us this query via email. He asks, is it safe to invest in Bitcoins via CoinX Trading, which is just one of the platforms that offers investments in Bitcoins? He's saying the returns look very attractive, but I do not want to burn my fingers. Pankaj, much like everyone else, at times we just get so tempted with the kind of prices that we're reading about, but then given the fact that it's not a regulated currency, there are a lot of concerns with this, and then now we're talking about tax implications as well, which would be very high.
See, because it's not regulated, so simply I'll say that people should not invest in this. Yeah. And it's not an investment basically because based on the speculation, there's no intrinsic value of this. So it is only because of more demand in the market, more people are buying it, so prices are going up. But any day you may lose your money. So at this price, the people who invested at lower price, they have made money. But at this price, if you are entering, it is more riskier. So I'll say that you should stay away from this. Don't invest until unless RBI recognizes it. If they start regulating, then it's a different thing. But as of now, stay away from this. It's simple thing. When people are more greedy, be fearful about it.
Absolutely, Pankaj. That's in fact the view that's coming in from most of our personal finance experts who come here on the Money Show. Be wary of the Bitcoin and ensure that if at all you want to take a risk, then make sure you do your research properly. But we here on ET Now are not advocating investing in the Bitcoin. On that note, let's slip into a quick break, but quick update. We've got a new segment starting here on the Money Show called Meet Your Fund Manager. We'll have Ronak Onka, Research Head of PPFAS Mutual Fund, joining us on Thursday, 14th of December at 5:30 p.m. So don't miss that.
Great to have you back with us. This is The Money Show, and currently we are in conversation with Pankaj Mathpal of Optima Money Managers, talking about all of your questions and queries, as well as the kind of massive interest we've witnessed in the mutual fund industry in the year 2017. Well, let's move right on. We've got another question coming in from Mr. Balkrishna Karote in Malegaon. He says he's a 61-year-old retired man, and he says, I have invested a lump sum in the following funds. Please review my portfolio. He's got DSP BlackRock Balanced Fund, L&T Emerging Business Fund, ICICI Pru Balanced Fund. He's also invested in L&T Infrastructure, as well as Tata Consumer Fund, Motilal Oswal Most Focused Multi-Cap Fund, Axis Dynamic Fund, and among the lot, L&T India Prudence Fund. So it's a mix of kind of different kinds of funds that he's got. Let's get in your expert view. First up, do you think that he needs to rebalance his portfolio? Does he have the correct allocation? What's the advice?
No, my advice that he should
reduce the number?
Reduce number, as well as he should rebalance the portfolio, because he has some balance in his portfolio, as well as some small cap and sector specific funds or thematic funds. See, if you see return wise, I understand that some of the funds in his portfolio have delivered as high as 50 to 60% return in last 1 year. But when you invest in mutual fund, returns are not the only thing. You have to understand the risk as well. And 61 years old retired person, the portfolio is not suitable for him. So I'll suggest that you should have this balanced fund. Definitely these are good funds. You continue with these funds. Apart from that, add some large cap funds, some multi cap funds, which are investing across the market capitalization, across the sectors. But sticking to some thematic fund or sector specific fund makes your portfolio very risky. So funds like L&T Emerging Business Fund, which is a small cap fund, or Tata Consumer Fund, that is a thematic fund, these kinds of funds you should avoid keeping in a portfolio. If you have invested 1 year ago, I understand that you have already made good money out of these funds, but now rebalance your portfolio, exit from these schemes and add some diversified portfolio, diversified funds. See what happens, these kinds of funds have potential to deliver good returns or outperform the broader market during a particular period. But if you see the long term, these diversified funds will perform better. So that is my advice to you, that rebalance your portfolio to some multi-cap funds or large cap funds.
Okay, so you've advised some recommendations as well that you think he should put his money in?
ICICI Potential Value Discovery Fund, that is a good multi-cap fund, or Aditya Birla Sun Life Advantage Fund, that is another multi-cap fund. So this kind of multi-cap fund, because they invest across the market capitalization, there is a large cap, mid cap combination in that, in the underlying portfolio, and they invest across the market sectors. So in case one particular sector is not performing, even then there is a choice with fund manager that he can reallocate the fund in some other sectors. So investing in diversified equity mutual funds will be better for your profile.
All right, well, that's investing in diversified equity mutual funds is something that you should consider. Hope you've got the answers that you were looking for. Well, on that note, that's a wrap on this edition of The Money Show. Let's keep your queries coming in, and we'll catch you on a brand new episode tomorrow.